Welcome everyone. In this session we are going to focus on more final project tips to help you organize your work and set yourself up for success. I'm going to walk you through more of the Zimmerman case study structure, highlight some key areas for analysis, and also share some resources that can make your planning effort more effective. Also, I'll include just a few learning tips from the course, some things that we should highlight as we continue our journey. So here we go. As you develop your final project, it should definitely follow a clear structure, and the Zimmerman financial plan outline that I'll share with you in a moment is an excellent guide. This structure ensures that your analysis is thorough and it will address all required areas. Of course, you're free to develop your own structure, but if you deviate too far from this, you may do so at your own peril. We'll touch on each of these sections so you know exactly what is expected. For your detailed report, start with the Zimmerman's goals, along with an analysis of their current financial statements. Follow that with cash flow planning, tax planning, investment planning, and risk management. After that, be sure to address retirement planning, estate planning, any special circumstances, include relevant employee benefits, as well as any educational planning for their kids. This order will help you present your analysis logically as well as completely. One of your tasks will be to determine the Zimmerman's life insurance needs. Life insurance provides financial protection for surviving family members. You will want to calculate how much coverage they truly need and find the most affordable option. Also consider whether a life insurance trust might be beneficial for the support of their minor children. You'll see on the slide there are some links to life insurance needs calculator or a calculator, along with a term life cost comparison site to help you with this analysis. You can download my slide deck from the announcements and directly access those links, or you can search for them online. Here we revisit the Zimmerman plan outline because retirement planning plays such a critical role in their future. Think about how things such as asset allocation, retirement savings goals, and an investment policy statement will help guide them towards greater financial security. The retirement planning process begins with setting clear goals. In this case, the Zimmermans have no retirement savings whatsoever. You will need to determine how much they should be saving, how best to invest it, and whether that amount is even realistic given their current budget. You can use the Calc XML retirement savings calculator as well as the Morningstar article or investment policy statements included in the links shown here as some starting points for your analysis. Again, be sure to download the slide deck from the announcements. That will make it easier to access these links. Once you know how much the Zimmermans need to save, you will next evaluate whether it fits within their budget. If it doesn't, you must think about what changes they could make in order to support important goals like saving for retirement. For example, should they find ways to increase their income, to reduce expenses, or perhaps both? This is where your recommendations will make a real difference in their long-term financial outlook. Next, we take a look at a couple of important facts regarding personal finance, things that you really ought to know, not only for use in the final project if you choose to implement them and if it seems appropriate, but also in your personal life, and if not now, perhaps someday in the future. We'll begin with an understanding of how important home equity loans and home equity lines of credit can be as part of one's overall financial strategy. Either of these can be a convenient way for homeowners to access cash, but they can also lead to some serious financial trouble if they are used improperly. As you see on this slide, be sure to read the Investopedia guide, which is linked here, so you can speak knowledgeably about the pros and cons of these leverage strategies. Another important personal finance strategy you should understand is the difference between secured and unsecured loans. Secured loans are backed by collateral, while unsecured loans rely solely on the borrower's credit worthiness. Again, here's an Investopedia article, which will help you explain the distinction clearly as part of your project. Creditworthiness also plays a major role in personal financial responsibility as it determines one's capacity for borrowing money. A credit report is the factual record of a person's borrowing history, while a credit score is the numerical rating derived from that report. Be sure you know how each works and how one influences the other, so you can address the Zimmerman's situation accurately. In business, capital expenditures are those long-term investments in assets that are used to improve operations. In personal finance, this same concept applies to major purchases like a home, a college education, or retirement investments. Understanding this will help you think about the Zimmerman's spending in a more strategic, long-term fashion. As always, if you have any questions about the Zimmerman case study final project, or any of the tools and resources I've shared here, please reach out to me by email or phone, either text or call. Of course, I'm here to help you succeed and to make sure your project is the best it can be. That's all for now. I'll see you online again soon.